Hello, everyone, and welcome to another lovely episode with Jayfx. Welcome to Harmonic Patterns class. Okay, so this is a section where I'm mainly focused on using harmonic patterns. All right, so on this particular videos, I'm just going to dedicate it mainly to trying to give you the logic of harmonic pattern as a strategy in trading the market. Okay, so like you have to understand that when it comes to technical analysis, there are multiple ways you can do them. There are multiple techniques you can use. And just like how you have Wyckoff, smart money concept, Elliott wave, we also have what we call the harmonic patterns. Now, let's start with three main sections. For those of you who are new to the channel, I'm Jayfx. Um, Mainly, I'm John Ijiga, but on trading, I'm known as Jayfx. If you're new to the channel, on this channel, we create videos basically around trading. Okay, we try to give you perspectives within trading from psychology to stocks to crypto to Forex and mainly analysis. We try to give you perspectives and methods you can use to, crack down the markets using charts. Okay. Now, on this video, we're talking on harmonic patterns, and I'm going to give you insights to the logic of harmonic patterns. And at the same time, if you're new to the channel, you can check out our playlist where we have multiple videos where I break down multiple methods from smart money concept to Elliott wave to Wyckoff. And also we have series like the blending traders with success, which is being released. It's a set of videos that give you perspectives into different topics within Forex and around the ecosystem of trading. We invited about 5 different guests, all handled different days and different topics, from stocks trading to technical analysis to different edge in technical methods like smart money concept. And then we also had topics from what the forex industry is today, also to what most likely we're moving into as an industry. Okay, so all those videos are available on the playlist. You can go check it out. And while you're on that, let's just focus on what we have for this particular video. So let's start with section one. What is harmonic patterns? Now, what you see me displaying on my screen is a harmonic pattern analysis on GBPUSD, which is the pair. And as easy as what's probably not that easy for you who is a beginner, but what you are seeing on my screen is very easy to do. I'm just going to take everything out and make it all over again. So at the same time, you can have a view on how I did them and what that on my screen meant. Now, when you're looking at the market, what we're looking here is representation of data. We're looking at candlesticks. And what we understand is that candlesticks are just insights into what's going on within the pair. So you could be having Euro USD, you could be having GBP USD, you could be having BTC USDT. All are different pairs within the currency market, which you can use technical method on, as long as the price action is readable. Now, what makes this price action readable is where you have the market cycle, what we believe moves the market, which is actually emotions and investors, psychology, how the investors think, where they want to buy and where they want to sell. We understand that every moment in the market, shares are being bought. When you click buy, you're buying a share. When you click sell, you're selling a share. So basically, every time the market is, having transactions, and that is what we call liquidity. These are called liquidity providers. Now, these people make decisions based on key levels from support and resistance to supply and demand to smart money concepts and other methods. And these methods are what we use to interpret this market cycle. Now, based on this market cycle where we have the internal and the external structure, we have what we call the range. So on every market structure, there's a range. From this point, this is a range, and then this is a range, okay? So each range has a high and a low. Then once there's a break of structure, there's a new high and a new low. So price retraces back. Once there's a break of structure, there's a low, and probably there's a high. So we have this structure forming every single time. There's a range forming. Now, what makes this range move the way they do is what we call investor psychology, fear and greed. They're either panicking and selling, or they are greedy, holding, or they're looking to buy. Now, these are different ways the market can be moved. This is what we call the market cycle. But what we have now is harmonic patterns. So what are harmonic patterns? Harmonic patterns are key levels identified with Fibonacci ratios on range. So what I just explained to you about range, when you have a range from this point to this point, that is observing market structure, then we have key levels. So there are key levels within this range where supply and demand happened. How we get this key level is where Fibonacci comes in. Fibonacci is a special tool that can be used to break down key levels within the range without using your head. That is, it's a mathematical calculation. Fibonacci is very popular online. It's a method that is a mathematical tool that helps you calculate the let's say you just go look it up, look what Fibonacci is. So there's a tool on trading that helps you understand key levels within the range using Fibonacci. So once you understand the market's structure, you have a view on the range. Then you use tools like Fibonacci to understand what is most likely to happen next. Okay, so that's basically what I do. So what I'm giving you here is simply using a pattern out of these key levels after I've identified it. So now we have this range. I just identified this range. From this high to this low is a range. Price retraced back, created this high, and then dropped. Then we had a break of structure here, right? So if we were to measure this range, let's look at the Fibonacci ratios of this range. What I had earlier on my chart was something like this. So this is like the 38 Fibonacci level, the key level, 38. This is 50%, which is equilibrium. Above 50% is what we call premium. Below 50% is what we call discount. So when price is in a discount area, we do what? We buy. That's the law of supply and demand. When price is on a discount level, we buy. When price is at the premium, what do? We sell. So Fibonacci helps us to see the key levels within premium and discount. So as you can see, harmonic patterns basically go back to supply and demand when you start using the terms in logical method. So this is one of the reasons why you find me breaking down multiple methods and why I try to break down multiple methods, because I believe that the fundamental basics of every technical method goes back to market structure. Hence, every method can be readable. You just have to understand the logic behind it. So there's a playlist dedicated to harmonic patterns where you can learn more if you're interested in this particular method to know. Now, on each pattern, this is where we now have the principles that govern them. What makes the pattern valid is based on the formation within the Fibonacci ratio. Now, as you can see, we have different range. We identified one here, and then we identified another one here. There's another one here, and there's another one here. Fibonacci ratios help us to understand where this range are bouncing off. So that if this is the settings of my Fibonacci, there would have been more levels around here. So basically for me, I don't need them, because for this range to be valid using harmonic patterns, the price has to not go below this low. Okay, so this becomes an internal high. Now that is, you are understanding market structure, and then this becomes what? If you understand, you have this internal high acting as a higher low, a lower high, because it fails to create a lower low. Now we're expecting a higher high, right? So once that higher high forms, we're expecting what? A lower high. So on that scenario, what we have with Fibonacci ratio on the screen here, and what we understand from harmonic patterns, this is likely a harmonic pattern forming. So what makes it valid is how they align with, key Fibonacci areas. So now if we look at this pattern, which is being displayed on the screen right now, you can see the level, which this is being displayed. Now, when you use the pattern itself to play out what you see, you see, it makes it more easier to understand what's going on. Now, it makes your prediction more logical. Okay, so this is what I had on my screen earlier at the beginning of the video. I just gave you a breakdown of what it meant and why it looks that way. So when you have the understanding of what makes this pattern logical, it makes more sense why, they act the way they do. Now, when you see a reaction from price dropping from this point, it's kind of like how Fibonacci is supposed to work, because this is the most premium level of, this range. If this doesn't hold, then this high is getting broken, and the price is most likely moving bullish, in terms of breaking down this high. Now, this is just using Fibonacci ratio, okay? For me, I confluence other methods like smart money to help me get better understanding. Like I won't ignore the fact that this is looking like a supply zone, so most likely this is possible. But at the same time, I would also wait for a change of character from this point to be able to understand what's going on. This is the 4 hour time frame. And if I should go to the daily, I would want to look for confluence on the daily time frame, using multiple time frame analysis to understand why is this also logical and what could go wrong. And that's why it's called an analysis. Okay, so for you who is looking for something special, you have to understand that the psychology of harmonic patterns all depend on how you use them. How you place them using Fibonacci ratios and how you interpret the market structure with them. What you choose to ignore from the matter of what method be it support and resistance, and what you choose to apply. Because as you can see, because I have the insights of smart money concept, I can easily apply harmonic patterns with smart money concept. You might not have the insight of smart money concept and you have support and resistance. That would be a different ratio in terms of accuracy compared to my own way of using harmonic patterns. So these are key concepts, key aspects you have to pay attention to when you're trying to understand them as well. So on the daily time frame, we see this as a major key level, which is what we had earlier, right? And then we see this as a swing low, and we see this as a major break of structure. So using support and using smart money concept, there's most likely every possibility that price could rise from this point. Okay, which supports the possibility of a Fibonacci of a harmonic pattern, sorry, in line with the Fibonacci ratio we had earlier. Okay, so this is harmonic patterns. And thank you for watching. If you find this video educational or you wish to learn more about Forex trading, check out the other videos on the channel and on the playlist where you could find more, topics surrounding technical analysis. And you can check out our short videos where we also create videos to give you, quick informations as the name of the video sounds, short. Okay, thank you, and I'll see you on the next video. Bye.